Just BG Dollars back on your screens, and today I'm looking at Meet Kevin and his recent video called Worsening on the 5th of July. So obviously yesterday, and I've watched it through, and there was just something in there that I completely disagreed with. So I thought I'd rewind it back to the point what I disagree with, replay it for you, and just give my opposition viewpoint on it, because I just disagree completely. But I'm not saying that Meet Kevin's right. I'm not saying I'm right, you know, because of course any economist, any investor, we all have our different viewpoints. We all have our different opinions on what's going to happen in the markets, and no one really knows what's going to happen until that time point in the future. Okay, because as I said, I think stocks are going to go up in the next 3 months. I've been very bullish, and I've openly admitted that. Look on BG Dollars. Now is the time to go risk on. June 30th. Look what videos I've been posting. Am I all in on the markets? Yes, I am. I just invested into these two stocks. The market is at the bottom. So you can see that I'm very bullish on the markets in the next 3-4 months, maybe even till Christmas. Of course, in 3 to 4 months' time, I'll have to make another decision on whether am I going to stay in the markets, am I going to be this risk on, or am I going to maybe trim off some of my positions and start maybe going a bit more risk off. But anyway, let's just see what Meet Kevin has to say and what I disagreed with, and I'll be giving you a reason why I disagree with it.
You're in, you should always be asking yourself, what should I be looking for a red flag? Now, another thing you might just
It's this part here.
end up doing with leftover cash is what I've been talking about since January, which is just wait for a U-turn from the Federal Reserve. The problem is the following. Right now, we have year-end estimates that the federal funds rate will be at 3% by the end of the year, and by early 2023 will rise to about 3.5%. With a U-turn of the Fed going back from 3.5% to about...
Right. So he's mentioning a U-turn from the Federal Reserve. He's mentioning when the Fed turned dovish. Sorry, there's a moth on my flipping light. Hey, get out of here. It's gone. Right. So yeah, as I said, he's mentioning when there's a U-turn in the summer, aka he expects next year, 2023, he thinks to go more risk on. He wants to turn, you know, more bullish on stocks. He wants to buy in heavy then. But of course, I want to be actually shorting the market, complete opposite side. And you're probably thinking, BG Dollars, what are you on about shorting the market when the Fed turns more dovish? When they start to maybe lower the interest rates right down? When they start to do printing again, maybe money printing? When businesses are taking out loans at very cheap interest rates and starting to progress and employing again, and unemployment rates are falling and all this, that. Well, let's just show you why, okay? Because the thing is that any investor needs to understand, good news for the economy doesn't necessarily mean good news for the stocks, okay? As we've all seen, quality earnings for businesses, really good, strong earnings, and the stock price falls. We've seen bad earnings and the stock prices rise. It doesn't make sense. We've seen markets go up when interest rates have gone up. Doesn't make sense. Of course, we're not seeing that just now, but like in the history, we've seen that. So I just wanted to show you the interest rate chart, and this is for 2008, obviously before the 2008 recession. And in June 2007, look, we had a stable interest rate around 5.25%. This was July 2007. Look, boom. August 2007, they drop it to 5.02. Fed turned dovish. They started to drop their interest rates. Okay, so given Meet Kevin's sort of viewpoint on this, he would have bought. He would have started to have bought in August, September. Look, they were coming down. October, November, December. Look, they've dropped quite a bit. So Meet Kevin's thinking, or what he was referring to in his video, the Fed have U-turned. They've started to drop their interest rates. Let's turn bullish on stocks. You know, the Fed are saying we're bringing the interest rates lower. Maybe we're doing QE. You know, maybe we're starting to money print. And yeah, so he would have got into stocks around this point. So let's see what happened to the S&P 500. So let's go back. What time is it? Around September, October, November 2007, interest rates were dropping off a cliff. And look where we were in the markets during that period. October, September, October, November 2007. Of course, you can see at the bottom of your screens down there that the date. So October, look, November 2007. You would be buying up here. Look what happened to the markets within the next 2 years after you bought. This is when the Fed was so-called dovish. According to Meet Kevin, this is when the Fed U-turned. Look, stocks absolutely collapsed. And I'm saying this wasn't just the S&P 500. You're probably thinking, oh, well, that was just the S&P 500. You know, most of us are in individual stocks. Let's have a look at Apple. Boom, look at this, look. Of course, it lined up. We had a small crash here. April 2008, we were sort of back up. But look, boom, we crashed around the same time. And of course, look, December, November, October 2007, you'd been buying up here. So again, it wouldn't have worked out for any individual stocks. The market absolutely tanked. And that was when you've bought in when the so-called Fed were dovish. Yeah, when the U-turn came around. Now, of course, we can't just use one sort of instance in the history. We have to go for many. Sorry, there's the moth's back, and he's been a little pest. But anyway, so now we're going to go to 2000, the last sort of big recession before 2008. So let's just scroll over to the 2000 period. Maybe extend it a little bit more. So, of course, interest rates were level. July, September, August. They're not in order, those months that I've just said. But July, August, September, October. There we are. Look. So interest rates were level here. They start to sell off. December, look. January, February, March. So early 2001, they sold off. Not sold off. They just lowered the interest rates. The Fed did. The Fed lowered their interest rates quite big. And the so-called U-turn that Meet Kevin's on about happened again in the 2000. Early 2001. So let's see what happened to the markets. Early 2001, you were here. There you were. Look. January, February, March. So yes, you've avoided the highs. You know, you were not buying like the very highs like May 2000s. You've been buying in here. February, March was down here. Look, January, February, March. So the Fed were lowering their interest rates. They were dovish. The so-called U-turn from the Fed again, as he mentioned in his video. Look, early 2023 U-turn. That's obviously what he's going for. This sort of cycle. But look what happened to the markets. Boom, we tanked till 2003, and I'm talking big drops, especially for individual stocks as well. It wasn't a pleasant time in the markets if you'd have bought when the U-turn happened, when the Fed started lowering their interest rates. Which is why I'm telling you lot at home, just because there's good news for the economy. Yes, interest rates going down, fabulous for the economy, but it doesn't mean it's necessarily good for stocks, okay? That's all I just want to get across to you lot at home. Because as it's shown, look, in 2000, had you have bought in when there was a U-turn, had you have bought in when they started lowering interest rates, had you have bought in when the Fed were called dovish, you'd have lost a lot of money. And again in late 2007, early 2008, had you have bought in when the interest rates dropped, had you have bought in when the Fed U-turned, had you have bought in when the Fed were so-called dovish, you'd have lost a lot of money. And I'm giving you my opinion on what I'm doing in this current cycle. I'm actually shorting the markets when the Fed drops the interest rates. Yes, I'm shorting. You heard me correct. So when Meet Kevin saying, look, U-turn early 2023, maybe summer, I'll be shorting the markets, best believe, next year. Yeah, I think we're in a worrisome time. And when the Fed starts lowering the interest rates, I'll be shorting just because of that economical data that's come out in 2008 and 2000. Of course, who knows who's going to be right? But I just had to give my viewpoint on that because not a lot's been happening in the markets. You know, Monday was obviously a bank holiday. Tuesday was a big day for stocks, actually. Of course, when my recent videos going risk on, look, as I tweeted there, and my two most recent investments, which were Roku and Shopify, they had a huge day on Tuesday. So I was loving life. But today, Wednesday, we've seen them sell off a little bit. But I'm still up from when I originally invested. And of course, they're 3 to 4 month moves. You know, they're not just a week move. I'm not just buying them to sell them in like a fortnight's time. You know, I'm holding these till September, October and hoping that they'll move up big. So that's my aim. That's my game plan. And I'll be sharing that with you lot every step of the way. So please do subscribe. If you're still watching at this point, do hit the subscribe button because we're chasing 100 subscribers by the end of the year. And I really do want that. So yeah, that is my viewpoint. That is why I disagree with Meet Kevin. It's actually quite interesting because obviously when Meet Kevin said he's going to buy, I'm going to be shorting. So who knows? Two opposites. Who's going to be on top at the end? Who knows? But yes, that is BG Dollars over and out. I'll see you in the next one.